to identify and trade range-bound markets. These are the markets that tend to move a little sideways. It's like, man, why isn't it going up as fast as I want it to? Why isn't it coming down if I'm playing put options as fast as I want it to? Why isn't it pulling back to my level or going up? Why does it seem like the candles are stuck? Maybe some of these things for my intermediate and experienced traders and investors have experienced. You understand this. For my beginners, welcome to the channel. Go and check out some of the beginner videos, but in this particular one, I want to make sure you can identify when to not trade. And then also, if you decide to trade, more specifically, how to do it in these range-bound markets. Okay, you can make a lot of money in range-bound markets because you know where the stock has been stopped at resistance and you know where it is held up support. So we're going to identify it today on SPY, QQQ, and then identify a couple of things of like why it does that. So you understand that, oh, okay, we're in a range bound market. Oh, okay, we potentially will have a range bound market until X or Y or Z happens. Okay, so with that being said, my name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I'm also an investor and options trader, have developed some other businesses, former pharmacist, undergrad in chemistry. So we have had a entrepreneurial journey of around 7 years up to this point, approaching 8. So hopefully I can serve you in this video. If you like this video and what I'm saying and it's serving you, please hit me a like in the middle of it. I want to earn your like. Also, put some questions down below in the comments, or maybe you have a different perspective, maybe some tips and tricks that you do that you trade in a range-bound market. If you have no idea what I'm talking about, okay, and you want to join us inside of Leverage University, we would love to have you. And that leads into the sponsor of the video is my community, my pride and joy. I've been running this Leverage University for around 4 years now. I've been coaching for, like I just said, 7 to 8 years approaching. And this is where we talk about life, business, finance, credit. And then I've now included over the last year and a half, approaching 2 years now, this trading floor, which has been amazing for my community members and clients who have tacked on this skill set to give them an armor to be able to attack any type of market, recession, anything, so they can be able to make money on their own accord. If you're about that, welcome to the channel. Let's jump right into it. How do we identify a range-bound market, right? First, on the charts more specifically, I want to jump on SPY, okay? I want to jump on SPY, and we're on QQQ now. Bear with me here. All right, and I'm gonna jump into a 1 hour time frame. All right, and this is where we are. So each candlestick represents 1 hour, and we've got a range here from 580, let's just round it to that, to around 586. Okay, 585 and some change. Okay, so we got about a $5.50 range that we're just chopping in when it comes to the S&P 500. Okay, so number one, to identify a range bound market, you identify it within typically around a week's time frame, okay? Around a week's time frame, and you can identify that there are at least 2 to 3 touches within that range. Now, this is just my opinion, my perspective. Like I said, if you have a different perspective, put it down in the comments. So I can see here that we broke out of this resistance here because this was formerly resistance, right? Came down, and then we broke over that 580 mark and now held it, pushed up into 585, came back down to 580, roughly 579, pushed back up to 586, roughly came back down underneath that 585, and then we just have now been just range bound, okay, range bound. All right. Now, if you look at the ES futures, if that's more your jam, I can do it on there. If you look at the NQ futures, which are the QQQ futures, for the tech index, you're more than welcome to look at those, but I just want to make it simplistic, identifying SPY here, and I'll jump over to QQQ. So that is first what I do is identify, man, I'm not really getting the continuous momentum that I really want for it to take off. And I'm really not getting that deep pullback that we want for buyers to step back in confidently. So we now have this kind of range bound chop, okay? So step one on a range bound market, once you've identified it, you can choose to just not trade it, okay? You can choose to not trade it and say, man, until it does something, I'm not trading this, I'm staying away, right? And that is what a lot of investors or traders will do. They'll just say, range bound, I'm just gonna wait it out, see what happens. Now, why do people wait this out? Because new traders, and even I've done it too, we get antsy sometimes, right? You get antsy about making money every single day, but not every day is a trading day. So you want to identify that where are my best opportunities for me to have a good risk to reward, right? small risk, very high reward, and I don't get chopped up in here where it's not really moving. When it comes to options trading, that's not really good on the buying side, right? For those who know, on the selling side, right? If you're selling options, if you got 100 shares and you're selling covered calls, cash secured puts, things of that nature, if you don't know what those are, stay tuned to the channel. But if you're on the selling side, you like chop, right? If you're selling options, okay? Because it's not going out of your range, okay? But that is number one. Number two, my step number two is to trade the extended levels of the range, okay? Trade at the levels of the range. So more specifically today on October 22nd, if you're watching this in the future, October 22nd, 2024, I signaled to my community that I saw a gap down into the 580 level for SPY, right? Relatively, right? We also saw a gap down into this 491 of QQQ, right? More touches, 491, 491, 491, 491, 491, all the way up to 490, roughly 495, 496. And then there was another top end of the range, which is around 498. Okay. So once I saw that, I was like, man, it's at the bottom end of the range. Okay. That's a good risk to reward. My community members can easily take that trade, take it back up to 583, 584, and that will be roughly about a 50 to 100% trade, depending on the contracts that they chose, which is what happened. So that is step number two, trade the extended levels of the range. So if it's at support, you can look at calls as long as you have confirmation that is holding up that support level. Number two, you can consider puts, right? Depending on if you have confirmation. So like right here, the market's open at the time of this recording today. And do you see here that we got a little bit of confirmation of some sellers stepping in on a 15-minute candle, right? If we go into a 30-minute, even more confirming here that it's holding below that 585. So technically, we're forming somewhat of a lower high like that. Okay, do you see that? That is at the top end of the range, didn't reach all the way to the top, but it came up close enough and it's pulling back down, right? And then it'll probably settle in. Okay, so that's step number two. Step number one, identify the range, right? Choose not to trade it. Number two, identify the range and trade off the extended levels of the range. Calls, support, puts, resistance, okay? Now, number three is I typically trade lighter size, okay? If you've not gone and listened to the how to build a small account video, please go listen to that. Or if you need the intro to options, it says it in there. I'll summarize it, that you should have a position size on each of your trades. So if you have a $1,000 account, I'll just make it very simple. If you have a $1,000 trading account and each time you put $300 in and you get 30%, right? You're going to make what? 90 bucks. Okay. If you know that, great. Sometimes lighter size means range bound. It could get stuck. I don't want a lot of heavy position size stuck in a range bound market. So you might size down. You might come down to $200 per position size. So now you get your same 30% trade. Now you make 60 bucks, but you don't have as much risk in there, right? So that's just my rule of thumb. I like to size down in a range bound market until number four at this point, right? I'll round this out here, is that range bound markets typically happen, right, when they're preparing for a big move ahead. I'll repeat that again. Range bound markets happen when they're preparing for a big move ahead. Brian, what is a big move? How do I know it's coming? Two ways. We either have big earnings that are approaching, which is what's happening right now. We have our Googles, our Microsofts, our Amazons, our Apples, our Meta, our Tesla approaching. We have NVIDIA approaching in the next couple of weeks. So you have these massive earnings that everyone's kind of like, I don't know which way. Let me just sit out. Let me chill until something happens. So that's what this is telling you. Okay, we don't know which way we're going. Earnings could drop us down, one of the earnings, or if every earnings is just blown out of the water, kind of like Netflix, then we'll just take off and we're going to 6,000, right, on SPX and 600 on SPY. Okay, so that's one way to see that a big move is coming, is when you identify a range and it breaks out of that range. Okay, let me show you kind of what that looks like here. The last range that we were in was 565 to 574, right? 565 to 574. Do you see the last range that we were in, which is right around here? 565, 574, 565, 574, 565. Up, there's the break. Retest, take off. So what is this saying? Consolidation slash range, new range. Are we going up, or are we coming back down into the lower end of the range and then settling in back into these ranges? Okay. So again, as a reminder, identify the range, right? Then decide, do I want to trade the range? If I do want to trade the range, cool. I'll trade off the very solid levels where that range has reactions. Number 3, size down slightly. And then number 4, you know that there's a big move coming. When that big move comes, it breaks out strong or it breaks down strong, and we'll know, right? We'll know when you wake up in the morning, you're like, oh my gosh, SPY's at 590, something crazy like that. Or, oh my gosh, NVIDIA's headed to 150, right? Or Tesla just had amazing earnings, or they blew the earnings out of the water and they're tanking, right? Something will happen and we will see that range eventually break. That is when we can put a little bit more size, more volatility will pick up, which we love as traders and investors when there's fast movement, because that's when a lot of money's exchanged back and forth. Contracts and options are exchanged back and forth, right? That's where the money's made. All right. In summary, thank y'all so much for being here. I appreciate you. Hopefully this served you to understand what a range bound market, and maybe you're just getting chopped up, right? You're like, golly, like, why isn't this thing moving? Why is my contract decaying? Why can't I make any money? You can. You just need to know how to identify it and how to trade it. All right. Peace, love, and blessings to you. Until next time, right? As always, I say, I appreciate you. You don't have to spend your time anywhere. You decide to spend a little bit with me here. Please like, comment, subscribe, share it out with somebody. Go and check out my other videos, and I will see you, ladies and gentlemen, in the next one. Peace.